Hello, my name is Michael Brown. I'm the president of United Funding Corp, where we specialize in creative real estate solutions. Our company was established in the year 2000. Our management team has well over 40 years experience in real estate investing and real estate financing, mortgage brokering, real estate brokering, you name it, we've done it. In our careers, we've completed well over 1,000 transactions, and our varied experience gives us a full spectrum of real estate knowledge. What we do best is help sellers understand the pros and cons of all their options. When you're burdened with a home or you have low equity, you need to know what all your options are, and not just the opinion of one professional such as a real estate agent or a real estate broker or a real estate attorney. You want someone who's seen it all, done it all. We specialize in owner financing, and this is an option that other professionals simply are not aware of and cannot offer. Well, let's talk about all your options briefly. If you're burdened with a home, you can let it go into foreclosure or allow the bank to assist you with a short sale. However, that's a serious credit damage. So if you're credit sensitive or you're worried about the tax implications of these options, you definitely want to avoid them. If you're low on equity, you could bring cash to closing. But many people who bought homes brought little money to buy a home, so why would you want to bring cash to close a home when you're selling it when you didn't bring any when you bought it, and you may not even have the cash to bring to closing? So many folks, when they're burdened by home ownership, have to consider renting their home out. And I would say beware, be very aware of renting a home. If you're not frankly making a large profit of $400 to $500 a month, you're not going to offset the risk that comes along with renting. You may be able to preserve your credit for a period of time, but at some point your credit could be damaged because the burden becomes too great. And breaking even on a home is not breaking even, because you've got to pay for carpet and paint when that wears out. You've got to replace the heat and air unit when that breaks down, when the roof leaks, the deductible insurance when the tree hits the house. I could go on. But what most likely will happen is the home will go vacant. Someone will lose a job and they don't move out right away. You're paying a mortgage and they're not maintaining the home. They have no incentive to maintain a home. A rental home is like a rental car or renting a hotel room. It's just temporary, and the person who's renting doesn't care like an owner. So we created the option of owner financing, and we specialize in it, and it truly brings relief for a home seller. Many ask, so how does this work? The first thing I want you to know, there's zero cost to you as a seller if you take advantage of our services. We're not a real estate agent or a real estate broker who's going to charge you 6% of a sale. We're not a managed property management company who wants to rent your house out and charge you 10 to 15% for simply collecting rent. And we're not a real estate attorney who has to charge you thousands of dollars to complete a transaction. So we either buy your house through owner financing, or we find buyers who are willing to make a down payment to cover all the closing costs and legal fees. These buyers take over all the maintenance and mortgage payments, and they must make these payments in a timely fashion, and you can inspect the house to make sure they're maintaining the home. They'll earn incremental home ownership benefits, and we've got a built-in natural incentive for them to pay off the homeowner's loan early. If you'd like to get more details on this program, please fill out the form at the bottom of this page. Again, this is Michael Brown, and we look forward to serving you. Thank you.